This is a Galaxy Note 4. My parents bought it for me 4 years ago. I've kept it since because I am an epic cheapskate and these phones cost just a ton of money. Didn't want to waste it. But this is kind of obsolete now, so I'm just gonna toss it on the floor. My mom, however, is not a very frugal woman. She just had to have the latest iPhone. Lucky for me, she got a buy one get one free deal. So guess what happened? I got a free iPhone. Frugal Tiger. These iPhones account for roughly 60 to 70% of Apple's revenue. Ultimately, this played a key role in Apple becoming a $1 trillion company back in August. Since then, Apple has roughly shuttered away about $50 a share. So let's discuss whether it makes sense to take a position in Apple.
I just want all of the money. Do you know what I said? I gotta get the dinero, the cash, and the bread. Money. Do you know what I'm saying? I'm down to do the do.
Historically, I've always had the hardest time timing my buys and sells with Apple. Trying to time Apple has never worked out for me very well. But let's talk about the price as it stands right now. Right now, as of market close, was $164 and change. Based on the current numbers, I would maybe consider taking a position in Apple. There's a lot of worry right now, market as a whole. We could be in for a recession. We could have an economic downturn. We could have this or that. We haven't had a recession in 10 years or, a significant pullback. So a lot of people are calling for it. Where does that leave Apple? I still think Apple will do good into a recession. People are hooked on these iPhones. Some of the headwinds or some of the risks that I would take into consideration or be aware. And this is ultimately what I feel like why Apple stock has actually fallen. It was as high as $232, I think, all the way back in August. Apple stock fell because there were a number of headwinds. It hit a very numerically important market cap number. And for a short time, it had exceeded a $1 trillion market cap. So that was a very critical number. And there are a lot of market technicians who really look at numbers and they might look at the number 1 trillion and be like, holy, I don't want to curse in these videos, but might say a $1 trillion market cap, it could go higher, I don't care, I just want to sell this thing, I've been holding it for $20 a share, it's now at $232 a share, I'm going to just take my money and run, right? So you could have a lot of that going on, and that's a very big deal, hitting a $1 trillion market cap, and it could cause a cascading selling effect that could have taken place in the market. Another key thing that I want to point out is 60 to 70% of Apple's revenue depends on one thing, and that is iPhone sales. And we'll find out during the next earnings season, February, when the earnings come out, whether or not there is a price ceiling, whether or not people are willing to spend $1,000 or up to $1,500 on this phone. The bottom line is people aren't cycling phones like they once were. There was a time where you're on the iPhone 3, a year later you might buy the iPhone 4, it didn't matter. Nowadays, phones are way more expensive. There's all sorts of gadgetry, paying for all these engineers to build these phones, build the software the phones are on. It's costly. And with the current price tag of $1,000 a phone, people are actually even maybe less inclined to cycle phones. And that's essentially what the analysts are betting on. Now, having said all that, people will eventually have to change their phones. The phones get too old. I just drop my Note 4. Why? Because the phone was too old. Certain software was just not compatible with the Note 4 that old. So phones will have to get upgraded at some point. So a lot of those people that have been accustomed to an Apple product this whole time, I think will stick to Apple. For that reason, I don't expect the drop off to be that tremendous in potential loss of revenue with people cycling phones a lot less frequently, especially when you include the cost of phones have gone up as much as they've had. So I don't really foresee this being that big of a problem. Apple continues to make stellar products. You can now purchase Apple at a at a discount compared to what it's been trading for earlier as of August. I was taking a look at Berkshire Hathaway's acquisitions of Apple stock. In quarter one, Berkshire had acquired roughly 75 million shares of Apple. And in quarter two, they had acquired 13 million shares of Apple. And in quarter three, Berkshire had acquired another 500,000 shares of Apple stock over the year 2018. I ran some estimates and did some calculations, and from my estimates, I would have guessed their total cost average over their purchases for the year of 2018 would amount to roughly a cost average of $170 a share. So, right now with the floating market price of 164 as of Friday's close, you could potentially buy Apple stock at a slightly lower price than what I had estimated Berkshire Hathaway's 2018 cost average. Keep in mind, Berkshire Hathaway has owned over 150 million shares prior to 2018, so they've had a really huge head start. I've had some Apple shares prior to 2018 myself. So Warren Buffett's going to make money on this either way, so it doesn't matter, what he's done in 2018. But the key thing is he's still actively buying the stock. He's a believer of the stock, and he is probably the greatest investor of all time. So that's one of the reasons I am still for this stock for certain, because you have someone who has a lot of purchasing power and a lot more money that's unused that can buy the stock if it continues to fall. Beyond all that, if you guys want a little bit more information, how I did my due diligence, how I came across all these numbers, what prices Berkshire Hathaway was buying, or how much they even own, or what part of their portfolio is allocated to Apple stock, leave a comment down below. And maybe I'll do a video and we can talk about that a little bit more. Now back to Apple. Apple in 2018 has authorized over $100 billion worth of share buybacks. Essentially, they have a huge war chest of money that they have overseas. They're going to be bringing some of that money back here into the US. About $100 billion have been authorized to be spent on share buybacks. A lot of companies, when they start buying back their shares, without going into too much detail about why companies buy back their shares, it's very positive for the effective price of the stock. Keep in mind, companies will often buy their own shares when they feel like the value of buying their own shares, they're able to do that very cheaply, or the value of the shares, the price of the shares are very cheap compared to what the market is pricing them at. So essentially, Apple buying its own shares means it believes that the price of their shares are cheap. It is an effective use of their cash to buy the shares at this price. To make a long story short, it's a positive effect on the price of Apple to have these share buybacks. So as I was mentioning, my thesis was to buy the stock, but I'm going to keep my eye out for what the Wall Street Bets forum on Reddit says and what Jim Cramer has to say about Apple. If they both tell me to buy Apple, I might just have to sell my stock and take a short position. Yeah, my thesis would change tremendously. We'll take a look, maybe sometime in February 8th. I'll do a follow-up video. We'll see if I've made money, if I lost money, what did I do, if I have to sell my furniture or my appliances to pay off brokerage debt. Not so, Jesus Christ. All right.
Money. I just want the money.